Can you call guys to come in? All right, let's get started, guys. All right, shall we take our seats? We need to start. Shall we take our seats? Thank you, ladies and gentlemen. Members, shall we take our seats? Thank you. Please get seated, please. We need to catch our time. Shall we get seated, please? Thank you. All right, we start with some important notices. Remember, we have got ICAZ raffle, only $10, and to win 2 nights, 2 days here at Elephant Hills for only $10. I think it's a bargain. Please see Secretariat and buy your tickets. And also note that we got branded material being sold by ICAZ. Would you kindly see Secretary as well if you want to buy anything you like from the branded items? Get cash. Hopefully everyone has got the cash now. And you started buying airtime and paying bills. Thank you very much, Get Cash. Just a reminder for Chove, we are all putting CBZ t-shirts for the Chove trip. The buses will be ready at 11 a.m. by the front area of the hotel at 11, ready for 11:30. And make sure that you carry a warm jacket. Thank you, ZB. They've given you an alternative. If you've got another one, you can use it, but ZB has given you a warm jacket for Chove as well. But not sure what CBZ will say, you know how it is. But please have a warm jacket. And remember to take your passport, because you cannot go to Botswana without a passport. And stay within your group. You're allocated. Don't stray away. Stay in your group. And let's keep the time, okay? All right, so also tomorrow we said sports. We are wearing Old Mutual t-shirts. So make sure that for the sports activities, you are wearing Old Mutual t-shirt. And for golf and tennis, you need to register today in the foyer. If you're not clear for golf, see Godfrey Gwainda. If you're not clear for tennis, go and see Stan. But please register in the foyer to prepare for tomorrow. More notices will be given tomorrow on the sport activities as well. Right now, we'll be moving to the next speaker. And as said earlier on, we're sticking to 30 minutes because we want to make sure that we are on time for the Chove trip. And questions, we'll do 2 questions after his speech. And more questions will be allowed tomorrow during the panel of discussions. So right now, our next topic will be talking about the benefits of the National Code of Corporate Governance and how can the government of Zimbabwe enforce compliance. We all know the importance of corporate governance, both in public and private sector. There's no way we can preserve the future of this country if the practices in the private and public sector does not follow the principles of good corporate governance. So this is a very important issue, and there's a national code, but we want to understand exactly how can it be enforced, how can we measure its application in the various sectors in the economy. So this is a very useful topic. Just to give you a background about the speaker coming through to tackle that topic, he's a member of the Law Society of Zimbabwe and has been in practice for over 22 years. He has been with Kenner and Immerman since 1994 and became managing partner in 2000 and is currently the senior partner. His practice areas include mergers and acquisitions and all aspects of business law, including mining, mergers and acquisitions, banking, finance, private-public partnerships, BOOT, telecommunications, and media law. He is currently the chairman of Astra Industries, a ZSE-listed company, and Sibisa Brands Limited and Insco Africa Limited. So he's my chairman. He's a former trustee of National Gallery of Zimbabwe, former deputy chairman of Murray & Roberts, external counsel to the Judicial Service Commission and the Zimbabwe Revenue Authority. He is a resource person to the JSC, Law Society of Zimbabwe, the International Bar Association, and the University of Zimbabwe. Highly acclaimed international speaker on commercial and competition law and a publisher of numerous articles in leading business and banking weeklies in Zimbabwe. At the moment, is a sought-after Zimbabwean counsel by major international and regional law firms and global clients with business interests in Zimbabwe. And he continues to attract significant mandates. In 2014, he was involved in all legal aspects of the biggest deal on the Zimbabwe Stock Exchange. That is the acquisition by Atlas Mara of Bank ABC, among other transactions in the banking, finance, manufacturing, energy, and mining sectors for diverse clients from Europe, United Kingdom, Africa, America, Asia, further cementing his position in the market as the go-to Zimbabwean commercial lawyer. Ladies and gentlemen, help me welcome Mr. Addington Bexley Chinake.
Good morning, ladies and gentlemen. The president of ICAZ, former presidents of the Institute, leaders, the chief executive, colleagues, and friends. I think when I was invited to come and make a presentation before you, the first thought was that I would be not only outnumbered, but I would also be outgunned, because I would be the only lawyer in the room. But I'm pleased to say that I've had dealings with a lot of you at various fora and on transactions, and I'm pretty sure that at the end of this presentation, you will probably, in mitigation, not give me a qualified audit opinion. My topic today is the benefits of the National Code of Corporate Governance and how the government can enforce compliance. Being a lawyer, we always look at matters in the legal context. Fortunately, in Zimbabwe, we have a new constitution, and our constitution specifically provides for the right to what is called administrative justice. So the mother of all our laws takes into account the following. Every person has a right to administrative conduct that is lawful, that is prompt, that is efficient, reasonable, proportionate, impartial, both in terms of substantive and procedural fairness. So in other words, the test is not only about how the justice is delivered, but also the substance of the delivery. Secondly, our constitution provides that an act of parliament can give effect to this right. So when we now talk about fundamental rights, these include your right to administrative justice. But the constitution goes even further. It actually imposes a duty on the state to give effect to these rights. So when we talk about things like a national code on good corporate governance, we're actually not just talking about something that is good to have. It is something that is our constitutional right. And the purpose is obviously to promote efficient administration of the state. One of the provisions in the Constitution gives us the foundation or the principles around good governance. It provides that all appointments at all levels of government, and this includes what we normally call quasi-government institutions, must be primarily on the basis of merit. So once we introduce merit into the process, the suggestion or the intention of the Constitution is to make the process fairer and more transparent. Our new Constitution specifically refers to what are called state controlled commercial entities. And it provides that any companies or other commercial entities or wholly controlled by the state must, in addition to adhering to what I've just described above, also conduct their operations in order to achieve commercial viability, and more importantly for this morning's discussion, to abide by generally accepted standards of good corporate governance. So, ladies and gentlemen, our Constitution recognizes the need to have good corporate governance. In terms of Section 196 of the Constitution, there's also been a legislation of the duties of public officers. And when we talk about a public officer in this context, we're talking about everyone, from the chief executive of government to the cleaner in the government offices. Each one of these persons is obliged to fulfill the purposes and objectives of our Constitution. They are supposed to respect the people and show a readiness to serve them. And importantly, they're supposed to avoid a conflict between their personal interests and their public or official duties. From a leadership point of view, they must demonstrate objectivity and impartiality in their decision making and show honesty in the execution of their public duties. Something that has been lacking in Zimbabwe for quite a while is the question of accountability. Our Constitution now requires public officers to be accountable to the public for their decisions and actions. And obviously, they will have to show discipline and commitment, not to themselves, but to the people. So, against that background, what is the relevance of the Constitution in assessing the National Code of Governance in Zimbabwe and measures of enforcement that are available? Earlier this morning, there was a description of our economy as being one that has migrated from a formal economy dominated by large enterprises to an economy largely driven by small and medium enterprises. I would like to add a twist to that analysis and actually say that Zimbabwean economy is dominated by quasi-state and state enterprises. Therefore, the government, in terms of governance and code, national code issues, is actually a key player. And this is because of the section and dominance of the economy that the government and quasi-government institutions play. And the dominance is reflected by the economic policy that our government has adopted. In my view, our government is still interventionist in its approach. It still believes in command economics, and we haven't completely abandoned a socialist commercial approach. I'll give a simple example. If you donate urban land for free or for $1, what are you effectively doing to the value of that land and its capacity for development? So that shows that your objective is not commercially practical. And it also introduces a second level of discussion. What criteria are you using to determine the beneficiaries? So in essence, when the government dominates most of the key economic sectors, it becomes important that the government itself employs good corporate governance structures. The next question then is, why did government or Zimbabwe bother to develop a national code for corporate governance? I can do no more than quote from the foreword that is in our national code. And these are the words of His Excellency, the President of Zimbabwe, and he stated as follows, and I quote, "The state is required to adopt and implement policies and legislation to develop efficiency, competency, accountability, transparency, personal integrity, financial probity in all institutions and agencies of government at every level and in every public institution. So, those are the benefits. One, good corporate governance develops efficiency. Two, it will promote competence. Remember, we talked about the constitutional requirement for appointments to be done on merit. So you technically have the best people in the best jobs or in the most suitable jobs. It also allows accountability. It also encourages transparency and engenders personal integrity. And obviously the financial transparency will follow. As accountants or chartered accountants, you will all be very familiar with the Public Finance Management Act. And this act is complementary to the Constitution. It is also a recent piece of legislation that dovetails with the principles that I've just enunciated. The next item is what are the key focus areas of benefits arising from the National Code of Conduct. The first one I've already dealt with, accountability. There is also uniformity in governance structures and standards. There will also be better processes for decision-making and review. And key points in Zimbabwe at the moment, there will be term limits, and there will also be easier succession planning. Because of the natural tendency where someone overstays in a position, whether as an executive, a board member, a civil servant, or a leader, there's a tendency to see that institution as yours, and that introduces corruption and other ills. Therefore, having a good corporate governance model will help in limiting those tendencies. It will also result in improved financial management and improved financial outcomes. Dovetailing with the presentation by one of the earlier speakers, Ms. Bango, I also believe that good corporate governance has a developmental impact. In other words, by adopting good corporate governance policies, you will have a positive impact on the society, and I've just flagged some of the positive outcomes. In the interests of time, I ask the question, how do we achieve all these good things? The first thing is, being typically Zimbabwean, we'll either pray about it or we'll seek metaphysical intervention. I think that has been a big problem with how Zimbabwe addresses issues. We don't deal with the issues. The next one is we have a parliament whose job is to make laws that improve our society. So essentially, the government can legislate either through the Ministry of Industry and Commerce, through Ministry of Justice, making the National Code an act and therefore actually the law. We also have an option of demanding through demonstrations and other similar activity to have governance improved. That is an option. We also have the option to catch them young. Let us teach the next generation the good lessons. Let us teach them from a young age. Let's develop it. And then we have option E, which is your typical Zimbabwe. Let's keep talking. We talk about it in cabinet, we talk about it at board level, and we think about it. And in the advent of technology, we can just keep typing. We all know how frustrating it is to chat to someone on WhatsApp. You can see that they're typing, but you don't know whether they're talking to you or what they're typing. So I think that's typical about Zimbabwe. We love typing, but nothing actually comes of it. So for me, the question is it one or the other? Do we have to adopt any one of those single options? In my view, it's all of them. We need to have a harmonization of the law. And the purpose of that slide is to demonstrate that we are all really in a relay. Each one of us has a role to play in this process. So even though the government can make the law, the enforcement and participation in it is up to us. The government has taken some initiatives under the Ease of Doing Business projects to review governance structures as part of this process. To a certain extent, this is driven partly by our potential external funders, and therefore raises the question, will government actually see this through? So the question then is, do we want the national code to be best practice, or do we want it specifically legislated as a legal requirement? There are pros and cons related to the adoption of a particular process. The pros are obviously that once there is a law, it's easier to benchmark compliance, and it's easier to benchmark standards. But you will have heard that in terms of Zimbabwean legislation, there's more than 400 pieces of legislation that need to be brought in line with our constitution. So what that means is that you can have an overarching national code of conduct, but you will still need to go to the GMB Act, you'll still need to look at Zinara, you'll still need to look at Zimra, and change all those laws to ensure compliance. There's also the risk that people will simply tick the box. Do you have a board? Yes. Does it have committees? Yes. But do you actually act in accordance with the best practice? The cons are obviously that one size does not fit all. Almost every industry has, so the Companies Act is a big example which will affect all of us. It affects the requirement of audit, composition of boards, tenure of CEOs and directors, liabilities of directors on insolvency, etc. So there's a move there. The Banking Act, a lot of you are either in banks or have banking clients. You know there's a new Banking Act which was introduced focusing largely on governance matters. There's also amendments taking place relating to the law of insolvency and other legislation. But there's also some, There's also some key pieces of legislation that have been amended but have not been made public. So for example, the ZANU-PF Constitution was amended, but no one knows what it now says about succession. So is that a good thing or is that a bad thing? And will it result in a smooth transition or not? So I think I am probably out of time. And being a lawyer, I'm normally paid to speak, so I was just starting. So the task ahead, for me, that's what that lady represents. We have to show commitment, we have to have faith, we have to have dedication, and it is us who has to do something to improve our governance structures. Ladies and gentlemen, Nyalibonga, I thank you very much.
Thank you, Chairman. That was short, precise, to the point. Another round of applause for him. All right, any burning questions? 2 burning questions for him.
Some of the aspects, or most of them, will be made into law. Is that process still on? And what are your views around making those law?
Thank you for the question. I think the way I tackled it was to say we can convert the code into an act of parliament and then have it apply universally. But there's also the approach where various pieces of legislation are being amended piecemeal. And then in the interest of time, I didn't deal, for example, with the cabinet directive on parastatals, which is already been issued, and it has a guidelines that have been issued to every parastatal. And I think you can see the turmoil in that sector. But the question is, these are guidelines which are being issued by incumbent ministers. I can issue one today, I am reshuffled, he issues a different one tomorrow. So that's not cricket. We actually need a more enforceable kind of approach. So the question that arises when you talk about enforcement, do you say this is the national code? You must comply or be penalized. Do you lose your license? Is your board suspended? Does the company pay a fine? You know, but we didn't have enough time to go into all that detail. So the question about making the law must have sanction. A law that doesn't have sanction normally doesn't encourage compliance.
Thank you for that response. The last question from yes to mine?
Is the issue of the judiciary. And I suppose all these laws being changed and the good things with governance without reforms around the judiciary. Take, for example, the selection process of the final judges who then get into the High Court, or what's been happening with the Magistrate Court. What are your thoughts around the process of, let's say you've got all of this thing in check, what needs to happen around the judiciary to ensure that these things are implemented accurately? Because if we change all of these things rightly so, as you've spoken to, and as is happening with a judiciary that does not effectively monitor it, it's almost like we're still in the same space we were in before the changes. It would be interesting to hear your views around that from your own experience.
Thank you. I think the first disclaimer is that I actually advise the judges. I'm external counsel to the JSC, so my answer will be limited to non-privileged information, but I'll also still try and give you a feeling of where we are. Not because they're my clients, but as a fact, the Judicial Service Commission is one of the entities which actually has a very active reform program. The first point is that it is no longer part of the civil service. So the JSC is now an entity on its own with its own budget and its own processes. The second point is that it is the only public institution at the moment that conducts public interviews. So already the JSC has advanced on recruitment on merit. So every person who's supposed to be a judge of the High Court, Labor Court, Admin Court, Supreme Court or Constitutional Court must subject themselves to a public interview. Okay. So obviously those, in my view, are progressive steps. The third one is that they are also working on specialization within the court system, because not every judicial officer knows everything about every law. So for example, there's a move to start a commercial court, which would affect us the most. So that commercial court will probably be staffed by lawyers with commercial experience. So they would know a bit more about governance, they would know a bit more about audit and those sort of things. So I would say it is a requirement and it is a work in progress, but it is not what it was, say 3 years ago. And I think the case in point, and at the beginning of my presentation, I put everything in the context of the Constitution. We have a Constitution now that is about 85% of best practice. And recent examples tell you that, for example, I'll use a political example. If you are detained by the police now, you can only be detained for 48 hours. The Makamba law is no longer in force. So a prosecutor can't decide that I want to extend your detention by 7 days. So already that introduces transparency. So before you are charged, the police must actually know what the charges are. Otherwise, you'll end up with a flag situation.
I don't know what it means, but thank you very much. All right. Thank you, sir. Just appreciate him. I'll invite Prudence to come forward and give our speaker our token of appreciation. Thank you, sir. Yes, sir. Right about now, we'll ask CBZ to come forward for their marketing slot. CBZ, 5 minutes, please.
I think it's still morning. Morning, ladies and gentlemen. I think much has been said about the current state of the economy. So I've just tailored my presentation today to talk to the theme of your conference, which is how does CBZ, as your Partners for Success, assist in helping you take ownership of your future. Can you just click? Whilst he's still navigating, I'll just tell you a little about who we are. Although I'm sure since we are your all-weather friends, a lot of you may know what we do. We are a financial services provider that focuses on banking, insurance, short-term. It's like an all-in-one financial services provider with a global reach. And our focus really is premised on partnerships, which really is the root of our corporate and our holdings company, where we say we are, and we strongly believe we are your partners for success. Okay, let me try and do this myself. I think it's faster. I did mention, obviously, our subsidiaries, so I won't focus on that. Much has been said, obviously, about the economic reality in Zimbabwe. So it says you need a partner that understands these dynamics and gives you the solutions that speak to those kind of dynamics. So from the broader picture, I just pulled out, I'm not a CA. I'm actually on the opposite side in marketing, but I picked a few questions that I think are some of the burning questions that CAs face, like how to grow and maintain stakeholder value, how to stretch the limited resources and minimize the costs, how to optimize productivity of your staff and boost their morale in this environment, and how to create wealth and financial independence and stability for your families both now and in the future. In answer to this, we believe we have what it takes and we have the solutions available to assist in making your lives easier amidst these challenges. CBZ Holdings, for one, is a gateway to investment in Zimbabwe. We have been pivotal in terms of bringing in funding that is supporting local industry in both agribusiness and SMEs, which is the informal sector that earlier speakers alluded to. So we have the right muscle for it. We have also really invested heavily in low-cost housing, which is also an alternate investment option for staff to move from squalor into at least some decent accommodation. We've also structured a flexible project or product that looks at how do you access funding for such financing, which is not necessarily mortgage finance, but on a cash plus savings basis, where you save, say, 50% towards the value of the stand that you want to purchase, and CBZ gives you the other. It matches whatever is within your cash plus account for you to be able to achieve your goal a lot faster. We've also been focusing on the financial inclusion drive, which is unlocking markets for you to harness. Whereas if some of you do business with, the agri business, the tobacco farmers, we have allowed them to, or financially included them through our Smart Cash account. And also we have, over the past year, outlaid about 10 million towards capacitating SMEs who are the future of business, if what the other speakers said is still in line with where our economy is. Oh, I went to the wrong place. Sorry. Technology is messing me up this morning. In terms of over the last year, we have introduced a lot of game-changing developments as CBZ, including our mobile app, My Life Combo. We've moved to Visa Chip and PIN, and obviously I spoke about our financial inclusive products as well. So I'll just touch a little bit on the new innovations from the last time we presented to the same group. Our CBZ Touch is an all-integrated financial services app. It's not just an app, it's actually your financial companion, because through it, you can actually access and track investments, track share prices. You can actually give maturity instructions. You can pay your DSTV, your RTGS. You can pay fees, tertiary fees, etc. Get policy quotations and also mortgage quotations from the same app. This app brings banking or financial services to your fingertips, which means it's offering total convenience that promotes productivity of your staff. We've also realized that whenever the inevitable happens, children are the most affected. So as CBZ, we've got products that guarantee the future education of your kids and also that look after your family in, sorry. This was supposed to play as a video. Maybe just click it from there. So this is a picture, really, a short video clip
More
that shows
when
what
the
is likely
family's
to
way of
happen
life is
to your
disrupted.
family in the event of
Do not let your
passing
absence
on.
be their final chapter. Because now, there is a combo that makes sure that life goes on, even after you're gone.
The My Life combo cover from CBZ ensures that your family is well taken care of in the event of your untimely death. From as little as $3 per month, you can get cover from $3,000 up to $30,000 depending on the premium you select. Your family will benefit funeral cash, accident cover, school fees, and groceries for a whole year. They will also be assisted with a tombstone when the time comes. To join, visit your nearest CBZ bank today. Life must go on with My Life combo cover from CBZ Life.
So a bit about the My Life combo is not just, we are not focusing on the funeral, we're actually focusing on the life after the event. So our combo is covering a lot of the pillars that we felt that a lot of families struggle with. So it covers your tombstone, it covers groceries, it also looks at school fees for the children, it also looks at personal accident cover, as well as funeral cash at the time of the event. So it is indeed a combo that you must have. We also have, we provide you with the convenience when you travel, or either on business or vacation, through our Visa Chip and PIN card, which comes with travel insurance and covers you for any eventualities that you face when you travel. We also have insurance, our short-term, protect your valuables with us, and access your claims from a variety and number of agencies and branches that we have over across the country. We also have our financial advisory powerhouse, which is our wealth management branch, which is the right place for you to transact because it is tailored and structured for high net worth clients like yourselves. So that's the place where you need to be. There's a lot of advice that you get there, your estate planning, your wills advice, etc. It's also done from our wealth management branch. We also have DATVest, which is our asset management arm that looks at securing and growing your investment portfolios and has had vast experience in the business of over 25 years. We've recently launched a customer experience center, which is a 24-hour contact center. So it means you don't need to wait for the next business day to get assisted by us. You can contact us anyway, anyhow, anytime. We are also on social media as CBZ, and we are waiting for you to like us, share us, and interact with us at your convenience. So I thank you.
Thank you, CBZ, and thank you for sponsoring Chove. I must acknowledge the CBZ holding the CEO is here. Never, where are you? Ah, he's skiving, eh? All right, thank you very much, CBZ. We appreciate all what you're doing. Remember, we're putting on CBZ t-shirts for the Chove outing. But before we go to Chove, we just want to have a technical update. Is Anesu and Faith ready? Faith? All right, so Faith will start with transfer pricing regulation, which you think is very important. You need to stay away from Zimra penalties. So Faith will really just quickly for 10 minutes, Faith. Right, 15. All right.
Thank you very much. My name is Faith Berry. I'm a senior manager in our tax department at PwC, and it's a very good morning to you all, and thank you for giving me this opportunity. Because I have been given 10 minutes, I'm going to try and run through the slides real quick. My agenda today, I'm going to talk about transfer pricing in a nutshell. I think judging by the audience, a lot of us have perhaps had some sort of experience and from an awareness perspective, understand what transfer pricing is. But just for the benefit of those that don't, I'll just give a quick introduction on transfer pricing. I'll also talk about the transfer pricing legislation. I'll talk about the typical TP transactions, the practical examples that we've seen on the ground in terms of what Zimra is actually doing. In terms of my presentation, I would have wanted to give Kuda a platform to talk about global developments in transfer pricing, but I think in the interest of time, I'll see how the time goes, if we can still talk about a few things on that. So in a nutshell, transfer pricing is really a hot topic globally, and it is really becoming a hot topic even here in Zimbabwe as well. So what is transfer pricing? In terms of the affected transactions, you find that transfer pricing affects cross-border transactions when we're talking about the global arena. But when we look at transfer pricing in Zimbabwe, our legislation also affects domestic transactions. So what really is transfer pricing, and what is the issue that arises from a transfer pricing perspective? So the issue really is where we've got related parties, there is obviously the issue that related parties can manipulate transactions. And when that happens, we can manipulate prices that get charged for transactions between related parties. And in the process, we can actually shift. So the issue with the arm's length principle is that that's what we should really be using to determine what the price is that should be charged for related party transactions. But I'm sure you would all know that it's not easy to determine what the arm's length price is, what the market price is, especially because there isn't readily available information on the market. And because of that, and also for the reason that the arm's length principle is very subjective. So you find that there's an ongoing war between tax administrators and taxpayers in terms of what should be the price. Obviously, the tax administrators will be pulling in their own direction, and taxpayers will also be pulling in their own direction. So you find that there's that mismatch, and there'll always be subjectivity in terms of what the price should be. So just touching on the legislation and what has happened on the transfer pricing landscape so far. So we've actually got transfer pricing legislation, which is effective from the 1st of January 2014. Prior to January 2014, the commissioner was actually using general anti-avoidance rules to attack related party transactions that were perhaps not at arm's length. So the effective from the 1st of January 2014, legislation was introduced, and the initial legislation was very vague in terms of how it was going to be applied, in terms of the principles, in terms of the practical application guidance. But what has happened is that in the minister's speech in November 2015, there's been so much clarity that has been provided. There's so much guidance that is now available. So one of the key things, for example, that wasn't clear in terms of how transfer pricing was going to work was with regards to guidelines. As I said already, the arm's length principle is very subjective, and it's difficult to come up with a price for certain transactions. So you find that the OECD, which is the Organization for Economic Cooperation and Development, has taken a keen interest in transfer pricing, and they have provided guidelines which are supposed to be followed in terms of how to apply transfer pricing on the ground. So in as much as the legislation wasn't clear from the 1st of January 2014, from January 2016, there were a lot of enhancements, and part of it was that the legislation is now clear in respect of the fact that they have clarified that we will follow the OECD guidelines, and that will also follow the UN guidelines are also acceptable. They've also made it clear that transfer pricing documentation is now a statutory requirement that will be affected by transfer pricing. And the other two sections, which is section 98 capital A and capital B, they basically, I think the key principle there is that all related party transactions are supposed to be at arm's length, and that is specifically legislated, and that's what the legislation requires. Obviously, if your related party transactions are not at arm's length, the commissioner can make adjustments and to reflect the arm's length principle. And the issue is the onus is always on the taxpayer to be able to prove that transactions are really at arm's length. Okay, I'm going to just carry on while they put the technology together. What I'm going to talk about now is the enhanced legislation in terms of what the requirements are from the 1st of January 2016. So what has happened is that the definitions of associated entity, or rather controlled entity, and comparable transactions has been enhanced. So it's now quite clear what is going to fall into the transfer pricing net. The other thing is transfer pricing methods have also been defined. So the commissioner has made it clear which ones are the acceptable transfer pricing methods. So the 5 methods that are also in line with the OECD will also be acceptable locally by the commissioner. And that includes the resale price method, the comparable uncontrolled price method, which we normally refer to as the CAP. We also talk about the cost plus method, which is the CP method, and we talk about the transactional net margin method, as well as the profit split method. So all the 5 methods will be acceptable by the commissioner, but they've also made it clear that if you use any method that's outside those 5, you will need to get approval from the commissioner, and you also need to explain why you haven't used the 5 methods that are already available. They've also said that the CUP is the preferred method, and the CUP and the resale price and the cost plus method, those ones are, can I say, they take precedence over the other two. So one is to really understand and obviously demonstrate and show why you have selected a specific transfer pricing method. So an understanding of the various methods obviously becomes very important. In terms of the sources of information, I think I've said that the key thing is the arm's length principle. That's the buzzword. But how are you able to demonstrate that transactions are at arm's length? That's the question that I get from a lot of people. That how do I demonstrate to ZIMRA? So how do you demonstrate to ZIMRA is that if you are in a related party transaction situation, it's either you are supplying only to related parties or you're also supplying to third parties. So if you are supplying to both related parties and third parties, it means that your transaction with the third party, if you are transacting under similar terms and conditions, you can primarily use that to show that the price I'm charging my third party is similar to what I'm charging my related party. So that can be used as a comparable and to demonstrate that transactions are actually at arm's length. So that's from the one side, which is the supplying entity. You can also look at it from the perspective of of the receiving entity. So if the receiving entity is receiving from a related party and also receiving from a third party, then the receipt, whether it's goods or services, then the receipt of those goods and services, the price that a third party is charging could also be used to demonstrate, assuming that you're charging the same price for related parties and third parties. So that's internal comparables. In the absence of that, we would have to use what we call external comparables, which is where one is to go out to the market and try and determine what other third parties are charging each other. But obviously, because of the lack of information on the market, it's not the easiest of things to do. So generally in the African context, and obviously in Zimbabwe as well, there isn't readily available information on the market. So you find that we would have to go to, for example, the European market, where they've got commercial databases that give dumps and dumps of information, but one would have to go and define specific parameters of what you're looking for and interrogate the database so that you get specific information that you're looking for. So that's what we then use as external comparables. But the issue there is that obviously the European market is different from the Zimbabwean market. So one has to consider whether there should be adjustments that one has to make to be able to show the comparability between the transactions. That's a specific thing that's also covered by the legislation, where they've said they acknowledge that comparable information is not always readily available, but they will accept us using information from other geographic markets, and obviously considering the risk factors to see if we need to make any adjustments as far as that is concerned. One other key thing also is with respect to the arm's length range, where the legislation acknowledges that there isn't one price that's going to be acceptable as the arm's length price. We can use a range. They basically adopt for a statistical type of method where you've got the lower range, the upper range, and you've got the interquartile range and the median. So they basically say the interquartile range would be acceptable as the arm's length range. So this is, for example, applicable where we spoke about external comparables, where you go and interrogate a commercial database and you get a range of information. The interquartile range for that information is what you can use. So if your price is falling within the interquartile range of the external comparable information data you have, it means that your transactions are at arm's length. Intangible property transactions are also a key thing that was covered by the legislation, but this is still very controversial. And on the global market, they talk about a project that they are working on at the moment that covers, they call them hard to value intangibles. And as it says, intangibles are really hard to value, and it's not going to be easy to come up with a market value. So these are some of the challenges that we have to deal with, and we'll see how that pans out as the project continues. The next thing is corresponding adjustments. And this is very key, really, because I've already said transfer pricing is going to affect both domestic and international transactions. So for domestic transactions, it's quite easy, because if ZIMRA makes an adjustment on the one entity which is within Zimbabwe, let's just say, for example, they say your income is understated, so they increase your income. They basically say they will give you a corresponding adjustment on the other entity where you can claim for the same transaction as an expense. But as far as international transactions are concerned, it becomes a little bit difficult. And the legislation specifically says that it will give an adjustment where we've got double tax agreements with the other country. So where we haven't got double tax agreements, it really becomes difficult. But where we do, then you'll have to communicate with the other authority in the other country to be able to make sure that they give you the adjustment. Okay, I've already spoken about the OECD guidelines and the UN guidelines. And the other key thing is secret comparables, where really the Revenue Authority is not supposed to make any adjustments using secret information. So where they propose an adjustment, they should be able to demonstrate how they have determined the market price and where they obtain their information from. And the taxpayer should be able to use that same information to either defend themselves or to agree with the adjustment that would have been proposed by the commissioner. Documentation requirements, I think I did mention earlier that transfer pricing documentation is now a statutory requirement from the 1st of January 2016. So if you've got significant related party transactions, you need to make sure that you've got documentation in place. And typical TP transactions, I'm just going to run through this real quick. So it's management fees, technical fees, shared services for group companies. Obviously, if you are sharing, you would have to share if you've got a group CEO, a group finance director, that's obviously a shared service because they'll be taking care of all the subsidiary companies within the group. So there will definitely be transfer pricing issues there. Transfer of assets, leasing arrangements is also a very popular one. We've got a subsidiary that's got a property owning company, and the property is perhaps being used by the holding company or another subsidiary within the group, and maybe they are paying rent, maybe they're not even paying rent at all. If they are paying, is it market related? Those are some of the questions that one has to think about from a transfer pricing perspective. Payment of royalties between related parties or right of use of intangibles between related parties, it becomes an issue. Financing arrangements, gone are the days where we used to have interest-free loans. The question that we always ask from a transfer pricing perspective is, if you're dealing with a related party, would you have similar terms and conditions, or you would have done something differently? So that's the question that one always has to ask to try and analyze to see whether there is risk or not. In terms of practical examples, what we have actually seen ZIMRA, enforcing on the ground, they've definitely questioned excessive management fees that are being paid to related parties. They question whether the service has actually been provided. They question whether there has been any economic or commercial value that has been obtained by the receiving entity. And they also question how you have determined the arm's length price. I think a lot of people have been using percentage of revenue, but that is subject to attack because you find that the service is not necessarily directly related to the turnover, but there's got to be, according to the OECD, the cost plus method is the most appropriate method to be used for management services. There's also questions regarding overstatement of cost of sales of products. So in this case, it was a subsidiary locally that had a holding company in Europe. And the question was, if you are buying product from a holding company in Europe, is your cost of sales not overstated? How have you determined the price that's being charged? And that we actually helped out on that case, and that has been closed. The other issue was on cost recharges. South African holding companies got a subsidiary here in Zimbabwe. They are basically providing a service to the holding company, and what they were basically doing was just recharging the cost of the service without applying a markup, and that came under fire to say, if you are dealing with a third party, would you just cost recharge, or you would seek to charge a markup so that obviously you make a profit, because no one is in business just to recover cost. Group shared services, I spoke about that, where we've got shared internal audit, group internal audit, group HR, group IT. We definitely need to think about transfer pricing because all those shared services need to be distributed using an arm's length allocation key. Continued assessed losses are a definite indication of the fact that perhaps the price that's being charged is not arm's length, and there could be cases where obviously there are reasons behind, but one has to interrogate the system and see. So for ZIMRA, they see this as a risk factor. So in closing, I think the key takeaways are that you need to be prepared, you need to have your game ahead of ZIMRA, and you need to stay ahead of them. How do you get prepared? You need to analyze your TP risk by performing perhaps a risk review, identify all your related party transactions, and assess the level of TP risk. If you consider your level of TP risk to be low, it's probably okay, because even the OECD acknowledges that the compliance costs of trying to comply with the requirements and the legislation from a TP perspective, they shouldn't be so burdensome that they are not at tandem with the materiality, or rather the level of risk that's associated with your transactions. So where you've got high level TP risk, then obviously you need to start thinking about transfer pricing documentation, which I think is a comprehensive topic on its own for another day. But I just want to emphasize that TP documentation is not just a quick exercise that one can do overnight or within a day, but it's a really comprehensive exercise that takes a lot of factors into consideration. And obviously I haven't got enough time to get into all the details, but if you need to talk further, we can take that outside the forum. Thank you.
Good morning. Good. It's good to. Right. I don't have much time. Right. I'm gonna quickly give you an update on IFRS, most looking at amendments and especially those that affect us right away in our market, including the new standards and exposure drafts. So on amendments, mostly, you've got your joint arrangement amendment where if you acquire a business, you acquire an operation and you're not sure whether it's a business or not. I'm sure that affects us quite a lot of times. You need to consider that from IFRS 3. Also, some people were charging depreciation from revenue, and the standard clarified that no, we should continue using our own, the normal straight line and using balance method. So others had thought ahead and say, probably let me link it to revenue. And that has been clarified. And this is effective January 2016. Okay? You can now treat a mango tree like PPE. Okay? Not the mango itself, but the tree. Okay? So agriculture bearer plants can now be treated as PPE because their fair value less cost to sell from S41 is very difficult to measure. So your tree plantations, your fruit-bearing trees can actually come through that way, right? And now the new issue that you can now treat an associate according to the equity method in the separate financial statements from IS 27. There's a paragraph 10C added as well, which you can actually use. But watch out, it's an accounting policy story. So if you have been measuring your associate, let's say at cost, you are now allowed to use IS 28, but it will be a change in accounting policy and the repercussions of change in accounting policy would come through. There's been a change, or there is an imminent change in 2017 on cash flows, that when you do your financing activities, especially the movement liabilities, you need to disclose the non-cash and the cash changes, actually an additional note on top of things there, right? Deferred tax, you have got your available for sale investment, you have got your fair value through P&L investment, and it is in a loss. I'm sure we see our market is going down, and its cost is higher than, it's tax-based, the cost is higher than the fair value, then definitely will be affected there, right? I'm moving a little bit fast, I'm sure you can understand the time. Right, IFRS 15, all these standards went away. IFRS IS 11, IS 18 have been taken out, and because we have a new standard, revenue from contracts to customers, and you don't apply this standard if there's another standard that applies to it. So if you have got a financial instrument for a bank, they start applying IFRS 9 first, insurance applies IFRS 4, leases, the property companies apply that before you apply IFRS 15. So we call it a residual standard. Okay, right? The key items is we no longer have your available, your sale of goods, rendering of service, and so forth. We've got the 5-step model. We identify the contract, we identify performance obligations in the contract, and we determine the transaction price using our customary business practices, and we allocate the transaction price, and we recognize revenue as we meet the performance obligations. Other guidance, other considerations, warranties, what we call guarantees, I'm sure you know that. Right of return, disclosure licenses, as well as option to obtain additional goods. These are customer loyalty, agent versus principal, repurchase agreements, very interesting aspect, contract costs for long-term contracts, and bill and hold items have been specifically covered in this new standard, right? And this standard for me will mostly affect these industries: telecoms, manufacturers, real estate and property development, software developing and technology, I'm sure you wonder how you can account for a license, what do you call it, software license like your antivirus. Is it a sale of goods or or rendering of service? And that's covered under there, right? Just a pointer here, okay? Sorry, there's a little bit of speed there. Okay. All right. Okay, from FRIS 9, we've got a project happening there. So please, on FRIS 15, watch out, because you need to start looking at FRIS 15 from 2016 as you prepare for 2018. And FRIS 9 is a big project, and there's a big project actually happening now. FRIS 9, classification of financial assets changed, and impairment of financial assets, and mostly the financial assets are classified differently now as well as the liabilities. Impairment is a big story there. Okay, I don't know if you can stop it for me. It's moving too fast. Right, so on FRIS 9, impairment classification has changed big time. Impairment, we are coming back to the general provisioning, using what we call the provision matrix for the normal trade receivable, okay? An entity has to create their own provision matrix, and which they actually assess every year, and use that to impair. Whereas for financial assets within the banking, the specific financial specific entities, then for these ones, you need actually to make sure that you have used the impairment model under FRIS 9, which is your stage 1, stage 2, stage 3. And there's a project underway right now to be able to lead in that aspect, okay? And on leases, okay? On leases, ladies and gentlemen, the lease standard, the operating lease has been taken out, so we are no longer allowed to classify as a lessee. This is a big story for us. Okay, let me just go to leases. So for leases, we are no longer allowed to classify leases under as finance or operating in the books of the lessee. However, the finance lease, the lessor still can classify as either operating or finance, but the lessee cannot do that, okay? And in that case, we are taking out what we call off-balance sheet financing that was caused by the operating lease. So all leases are now treated as finance leases in the books of the lessee, right? And, okay, eventually, the other big issue that's there, okay, the other big issue that's there is the issue of, okay, just go back 2 slides before. The insurance contract is coming. There's a new standard on insurance contract, and the new conceptual framework is also a big standard that's coming through. So it is very important for us to be involved in the changes, going to CPDs, as well as being able to look through our entities in terms of those key standards. So for me, operating leases, if you're a lessee, we're going to be affected big time in terms of the classification that we used to have. If you had operating leases that were not on your books, from 2019, you're actually supposed to bring leases onto the books as using what we call the right of use model. Assets are now being seen as a bundle of rights. Whilst one does not have the right to occupy, to use, because the lessee has that. You have the right as a lessor, you have the right ownership and legal ownership. The lessee has the right of use, and they actually have to put the asset and the obligation to pay on the balance sheet. So that's a big change from lessees, and we need to watch out on that. Revenue watch out on the fact that 2018, you are supposed to be showing revenue according to IFRS 15, but you are required comparatives, and those comparatives requires an opening statement. So in other words, opening statement of 2017 is 2016. So which means you need that as well. That is the same for IFRS 9. So please watch out for those key standards. IFRS 9, IFRS 15, and IFRS 16 leases. If you are a lessor, and I'm sure there are a few lessors here, because we've got a few property companies that leases out, you are not affected. The standard is exactly the same. But most of us are mostly sit on the side of the lessee. And in that case, we are very much affected. Because if we are on an operating lease side of things, we are supposed to come to finance less, recognize us the asset, intangible asset, and the liability. And that's going to actually affect our ratios, if you can come to think of it. And I encourage sensitizing our stakeholders, be it shareholders, be it the market, okay, by starting to look at disclosures that gives that future impact. So here we are today using I-17, but if IFRS 16 comes, this is the change and the potential impact on our balance sheet and the potential impact on our P&L. So it's mostly being able to come to the party and be involved and starting to look at your balance sheet which concerns you and make sure that those changes are taken into account. For insurance, guys, there's a small possible exemption on an ED coming from November 2015, which may actually give you an exemption from applying IFRS 15 because the new IFRS 4 is coming, which takes into account solvency, and that if you apply IFRS 9 on the current IFRS 4, there may be an accounting mismatch. So please look out for it and hope that we'll prepare well and have a better year end for 2016. Thank you.
Thank you, Anesu and Faith. Members, for more information, CBD committee will be providing you a platform to get to know more on the new IFRS 15, 9, and 16. So just watch the space for CPD and support CBD committee and attend and hear more on all these technical matters. Thank you very much, guys. Another round of applause. Just appreciate these guys. I would want Rutendo, please to give Anesu the token of appreciation, and Sechmo to give Faith Mary the token of appreciation. If you can do that now, thank you very much. Right now we'll be walking out to just go to our rooms briefly and prepare for the Chove trip. The bus is already at the front of the hotel. So just quickly go and get your t-shirt, get your warm jacket, get your passport, and let's get to the buses. Thank you very much. See you in Chove, Botswana. Raffle tickets available Secretariat desk if you have to buy, and also our branded items. Can you also complete the survey forms you have been given and bring them tomorrow morning? Thank you very much.